Welcome to this week's video where I discuss what I believe individual investors should be focused on in the next 5 to 10 business days. We've seen a COVID resurgence, unfortunately, in Europe, some parts of North America, here in Canada. How is that affecting individual investors? And bank stocks. Canadian banks report earnings over the next week or so. We're expecting some really good earnings. Will they increase dividends, buy back more stock, or maybe announce an acquisition? We'll have to wait and see. And lastly, tech stocks. The Nasdaq is at all-time highs right now. Should investors still consider tech stocks as a key part of their portfolio? Stay tuned. Unfortunately, we've seen a resurgence of COVID cases around the world, in Europe, North America, and here in our country. A lot of individual investors are wondering, does this mean perhaps we will see some shutdowns going forward? I think it's not going to. I believe government will continue to keep businesses open. I think that from a positive perspective, we're seeing a lot less individuals in ICU or in hospitals currently. Yes, we are seeing a larger amount of cases, I think on a global scale, but those cases are less severe. Going forward, if the stock market were to sell off, as we have seen over a couple of days most recently, I would look at that as a buying opportunity because I believe it will be short-lived. Canadian bank stocks report earnings at the end of November and into early December. I think those earnings are actually going to be quite good. A lot of individual investors are looking to these banks to raise dividends. We've all been waiting for a dividend raise, and the estimates are for the average bank to raise dividends somewhere around 13%. We also could see a lot of share buybacks by these Canadian banks as well. I think you can still own bank stocks, and in particular, one of the highest yielding bank stocks out of our major five is Bank of Nova Scotia. I think individual investors that are looking for good yield, Bank of Nova Scotia definitely fits the bill. If you can handle the volatility of what owning a bank stock brings to your portfolio, taking a look at a lot of our larger major banks makes sense in my opinion. I think dividends will rise. All right, now you could earn anywhere around 4.3% on Scotiabank shares going forward. So as part of a diverse portfolio, as part of the anchor or the main component of a portfolio, I think Canadian bank stocks definitely are names that you should look for. The Nasdaq is at all-time highs currently, passing 16,000 most recently in points. In particular, tech stocks have been driving the indice. Should you consider owning some of these large tech stocks even still till this day, considering that many of them are at all-time highs? I think the answer is yes. Even though they've gone up, I think you can still own some of these stocks because their earnings have gone up as well. So as their share price has risen, so have their earnings. Names like Google, Microsoft, Apple, some of the biggest tech names in the world, some of the biggest companies in the world, I think you should still look at these names because over time, I think they will just continue to rise. Now, I'm not about to say that you should build a portfolio just out of tech stocks, but owning a few of these names as part of a diverse portfolio makes sense. Perhaps you sprinkle in a few chip makers, perhaps some of the social media names as well, and Amazon. What can you say? Amazon over the last few days has been on a tear. It is one of the names that hasn't gone up as much as many of the other big, huge quality, good quality names. So going forward, tech stocks, in my opinion, should be a part of everyone's portfolio, especially if you can handle the volatility and especially if you're looking for growth. And if we do see some of these tech stocks sell off as interest rates rise, in my opinion, I think that's just a great buying opportunity for investors.